stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grandy. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grandy at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grandy guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out. philsgang.com. philsgang.com.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grandy and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grandy has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grandy. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's Phil's.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grandy.
And welcome to my podcast, Phil Grandy, philsgang.com. A lot going on. Trump gets grumpy over China. What is China doing? Well, remember earlier this year, Trump played nice and reduced the tariffs on China, stuff coming into this country. We were going to charge the president of China, Wen Hongluo, 145%. But then Trump said, no, we'll reduce it to 30%. Well, however, the problem is behind that scene where he reduced it to 30%, he got the president of China grumpy because President Trump and our allies started to impose these controls over tools and technology and devices that China needs, okay, and you know, to be the leader in AI, we'll say. So what happened is yesterday China responds and he said, well, you know, I have all the materials that power your cell phones and your jets, and guess what? I'm not going to sell that stuff to you. Okay, I'm going to put a lot of restrictions on it. So there's a battle going on between Wen Hongluo and Trump as to who's going to control this AI sector. But remember, China has all the materials, the majority of the materials. So they basically control the materials that goes into making the chips that goes to the clouds, and so it's a mess. So China announced that, again, these really tough restrictions on all this rare earth material, as they call it, when it has, when you do that, they have total control, okay, over chips. And that's not going to work out very well because, again, remember, this whole AI business is, dependent on, these chips, and we don't have the material. They have the material. So that's not working out very well. So Trump turned around and threatened him today with massive tariffs. So it'll all get straightened out by Monday, I'm sure, because they both need each other, okay? And that's the way it works. I mean, think about AI, it's AI nonsense. The chip providers, there's really three chip providers, okay? There's NVIDIA, AMD and Intel. They have the market. They control 64%. They need the materials from China, okay, to make these chips. And remember what they do is they provide these chips to the cloud providers like Microsoft and Google and Amazon, then the smaller providers, cloud providers like IBM and Alibaba and Oracle. Now, if you take again NVIDIA, AMD, and Intel, that's like 64%. They control 64% of this AI chip. The chip making. So, but they need that material. So it's going to be interesting to see how this all fares out, because the material for our chips also powers everything from smartphones to fighter jets to you name it. So it's going to be very, very interesting to see how this all comes out. So China supplies more than 90% of this material, this rare earth material, 90% of it. Okay, and so there's this big control going on, this big fight. So we'll see what happens. In the meantime, the bond market doesn't like bad news, but that's the beautiful thing about the bond market. You can trust the bond market. You can't trust Wall Street. You certainly can't trust Powell, but you can trust the bond market, because the bond market tells you what's going to go on with the stock market. If you take Wall Street, you take the jibber jabbers on Fox and on CNBC and all these different shows, financial shows, they never tell you the truth, but the bond market tells the truth. And when the yields dropped, that's bad news. Remember, yields always drop on bad news. Now, most of the time when yields drop, think of it as interest rates drop. That's great for the tech sector, because the tech sector, they borrow and borrow and borrow money, and they want low interest rates. So when yields go down, usually you see these tech stocks take off big time. But today they tanked. They went down because this is a different thing that's going on. And that, this is very, very dangerous for, again, not only the chip providers, but the cloud providers. So we'll see how it all hangs out. By the way, when you're, that's the one good thing, again, about the bond market. It tells you the truth all the time. It doesn't lie to you. You know what's going on. It's like gold. People don't understand how important gold is, okay? When the price of gold goes up, Powell goes nuts, Wall Street goes nuts, because they don't want gold prices going up. And we've had our gold prices in 2020 is going up 154%. Gold since January is up, 50%, 53%. That sends a bad message around. It tells us that we got a real problem with our stock market. We got a real problem with our economy. Something's not right. And when your stock market goes straight up every day, okay, new all-time high, I think we had 54 or 47 in 2024, the S&P all-time new high. That's insane. We already have, I don't know, I lost track. The S&P so far for the last 8 months, I think we're up something like 42. I don't know, but a crazy number. So that's why it's important to look at gold as a red flag. Now, people are really making a lot of money, but you got to also understand it's sending a message that we got a real problem in our economy. And remember, when you have the bond market, when you have yields going down, it's telling you we got a real problem in our labor market. That's one thing. And again, we got big worries in the labor market, and because we're not hiring. And not Trump, but Powell made a terrible mistake when he decided that he's going to cut rates. And he made a stupid decision that he thinks, well, if I cut a quarter point, that all the manufacturers in this country are going to be so happy. They're going to turn around and they're going to start hiring like crazy. That didn't happen. That was stupid to think that. It's not interest rates. Not at all. It's not interest rates that are hurting the manufacturers. In fact, if you look, see if I have them here for you, I'll show you. It's not, the big problem for the manufacturers is they have no confidence. They don't have no confidence because the consumer is really in trouble. And you can give a manufacturer, you can give Nike or anybody, whatever, a cut. But what good is it? First of all, it takes a year for it to show up to help you out, okay? But even if the cut helps you immediately, it's the fact our manufacturers, our freight companies who ship this stuff around, they're dumping people like crazy. I mean, the freight shipments are tanking big time. Manufacturing slowing big time. And at the same time, we got this huge AI bubble going on. So again, with the economy where our freight shipments are tanking, our manufacturers tanking, our labor market's tanking, and this dope thinks a quarter point was going to fix all that. God, that was dumb. In the meantime, he made such a mistake. Remember, our inflation keeps climbing. Inflation keeps going up because we keep printing all this money to keep increasing the money supply, to keep push all that money to the 5 biggest U.S. banks. So the 5 biggest U.S. banks will provide money to the CEOs of all these big tech companies, so they keep buying their shares to push their stock prices up without having to have sales. Yeah, without having to have sales or having profits or earnings. They don't need any of that. Okay, they just got to keep on, again, just reducing the amount of shares they have. And the less shares you have outstanding, your stock price goes up automatically without sales. And again, the reason why it used to be a crime is because you're inducing people to buy stocks that don't know anything, and they think prices are going up because everything's terrific. And that's why it was illegal to do that, because when you're cutting the amount of shares outstanding, your company goes from, let's say, 1 million shares to 500,000 shares, and the stock goes from $50 to $200, a person, doesn't know much about the market. Oh my God, I got to get in. Remember, the biggest thing that hurts retail investors is the fear of missing out. I mean, fear of missing out's a terrible thing. And that's why 90% of retail investors lose money, because that's how they trade. Now, I shouldn't say retail investors, because retail investors are hungry for knowledge. And they really want to learn. I'm talking about the tourist investor. The tourist investor, he's a gambler, he's impulsive, he loves taking risk, he loves leveraging, he loves, borrowing as much money as he can for these AI stocks, and he jumps in and keeps borrowing and borrowing. But the problem comes with, again, when you have CEOs who are buying their shares back to push their stock price up, and then you look at the tourist investor who knows nothing about the market, he starts chasing these stocks, because the tourist investor loses 90% of his money because he doesn't get what's going on. He sees the stocks going up. I got to get in. Get me in. He doesn't understand the stocks are going up, not because the company's doing well. It's just cutting the amount of shares it has available for trading, and they just keep cutting it. So the tourist investor and even all the retail investors, they lose 90% of the time. And so this is going to be a real bloodbath when this thing really falls out. Now, we're not going to have a bloodbath with this. This is going to be fixed in a couple of days. Are you kidding me? Come on. China, they need us. We need them, especially with all this, when everybody's fighting for this space, for the cloud space and all this, chip space. And so we're not going to have a problem here. There's not going to be a crash because of this. Now, today the market going down. It's only down 600 points. The Dow, that's not much, okay? But one day it's going to be down, 2,000 points, 3,000 points, because the whole thing's going to just fall apart, because this is worse than the dot-com days. But I don't see that for a long time. I see this market, this AI nonsense, keep going up and up and up and up, as long as we're willing, as long as the Federal Reserve, okay, and Wall Street and the 1/100th of 1 percentile who control Wall Street, who control the biggest banks, who control Congress, as long as they are making a fortune on all this AI sector, they're going to just keep pushing more and more stock buybacks. And remember where they get their money from, okay, is from the 5 biggest banks who get stuffed full of money from when Powell increases them too, the money supply. So, the greed on Wall Street is so terrible, and the greed's so bad. I mean, there's not nice people on Wall Street. These people will sell their mother for 2 cents. They only care about themselves, what's happening in their life. Wall Street. And it's a big pressure cooker. Wall Street, it's hard to explain to people unless they worked on Wall Street. But it's a brutal place, okay? People stab each other in the back, and there's no loyalty, there's no friendships. I mean, it's for every penny. So they're not gonna let this spaceship stop anytime soon. So I think you're gonna see this just continue, because it's much easier than the dot-com. Because the dot-com, think about it, was really widespread. I mean, you just put .com by your name, and all of a sudden your company, you don't even have to have a phone in your company. Don't even need an address, just a P.O. box, and your stock would go up from $3, okay, in the morning to the afternoon, $80. And company after company after company would keep going public. That's not what's going on here. See, what people don't understand, where the danger here in AI is, you got just a handful of companies controlling this whole stock market. Think about, you only got NVIDIA, 3 chip makers, chip providers, 3, NVIDIA, AMD, and Intel. They control 64%, but people don't understand what that means. They have no idea what I'm talking about. When I say you got 3 companies controlling 64% of these chips, and then they provide these chips to the cloud providers, and you only got, remember, Microsoft, Google, and Amazon. They're the biggest cloud. So you got 6 companies. That's not what happened during the dot-com days. Every day there was a new company. I remember it clearly. I remember when us in the morning, the market opens, and then they'd be sitting there on CNBC. Oh, we got a new company. Oh, it's going public. It'd be $5, and within an hour it'd be $80. I mean, and then you're talking hundreds of cars. That's not what's happening. We'll talk more about this when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. Join my gang. It's free for 10 days and will help you learn how to sell short. Yeah, that's your insurance policy, not buying Clorox or Philip Morris or whatever, okay? I mean, people think, well, if the market crashes, I'll just go buy some a Clorox stock or whatever. No, there's no safety. You're dead. There's no place to hide. I just wish I could explain this better. I got it in my head. I know exactly what I lived through this, so I got it in my head. It's hard to get from my head through my lips out to you. And when you tell people what's going on, they just look at you like a deer in headlights. They don't know what you're talking about. And I get that because they didn't live with this. We did. I mean, just remember when you go back to the dot-com days, that bubble. Remember, back then, we started out, after the market crashed, we started out with QE. It affected all kinds of companies, okay? So QE, remember, the idea with QE was to print money, and so we take that money and go buy Treasury, so we dropped it. The Fed would buy Treasury, so it would drop the interest rates down to meet the zero rates, not at zero, but would bring the 10-year Treasury yield down. The Fed has no control of the 10-year. So, but what they can do is print a bunch of money, give it to the five biggest banks. The five biggest banks go in and they buy the 10-year Treasury yield, so the 10-year Treasury yield drops. So people buy cars and mortgages and homes, and so that's what QE was all about. Then they got worse. Then they decided, well, let's do some stock buybacks because remember, Wall Street lost about $12 trillion, and these guys wanted that money right back. They weren't going to sit there and wait and get their money back after 5 or 6 years of doing, doing production, okay, buying, increasing business investment, buying new machinery, and, increasing all this, productivity. It'd take too long. So they said, well, let's just go in and and what we'll do is print all this money. We don't care about inflation. What do we care about inflation? Let's print all this money and let's buy our own stocks. And the public doesn't know what that means. And they think our stocks are going up because we're doing good. And we got CNBC and we got Bloomberg's, and they'll lie like hell. And they'll tell everybody, oh, everything's wonderful. Here, listen to this. Listen to this. This is what I'm talking about. They're talking about there's no AI bubble. Are you nuts? No AI bubble? Listen, these are the same thing that happened with the dot-coms. Listen.
The Google searches for AI bubble. You're not concerned about that just yet.
No, so we're not calling this a bubble, again, especially on a valuation perspective. and to the people that are calling it a bubble, what is the alternative, right? Like, you're looking at valuations, they're not where they were in 2000 as far as on a forward basis. You're seeing remarkable runs in stocks. If you completely sit this out, and a lot of institutions did this in the early part of this year, now they're chasing the rally, you're missing out on a generational run.
What a liar. What a liar. But this is what they do. There's no bubble? Are you nuts? This is the biggest bubble in history. Because remember, as I said, it started out with QE.
Bubble?
You have all this printed money. And you take the printed money, give it to the five banks. The banks go in and buy all the 10-year treasuries, okay, to get the yields down so people start buying, houses again and using their credit cards again and getting the interest rates down. Now, in the meantime, the Fed drops their rate to zero so they can loan money to the CEOs so they can buy their own stock back with money that's interest-free. So you got all the CEOs buying their stock back, not costing them a thing. It's free money. And then you got... And that's bad enough, and people don't understand what that means. Stocks are going up, but not because of increased earnings, increased profits. They're going up because there's less shares. So you got that going on, and so the stock's going up like crazy. And they started right after the crash in 1998. I mean, in the housing crash, 2008. The first thing they did with all that money, instead of helping the homeowners who were screwed, they were going out and purchasing all these banks that were going down. The big banks, the five biggest banks, were buying all the little banks so they could get all their deposits. And no way, they weren't using that money to help anybody, just themselves. That's the mentality of Wall Street. So here we are now. Since 2008, we're still doing stock buybacks. And that's why you're seeing a magnificent, craziest bubble ever. Now what they do is they come in with AI that most people don't understand. But the difference is, during the QE, during dot-com days, then QE that followed, okay, you know how many companies were going public every day during the dot-com craziness? What was the pet store? It was called Smart Pet or something? That stock went nuts. I don't remember the proper name. I think it's PetSmart or something like that. The stock went crazy, but every day there was 4, 5, 6, 7, 8, 10 stocks going public. And they'd sit there on CNBC and Maria Bar, they're on fire, they're on fire. Stock comes in at 5, it's on fire. And then you'd have Kramer with the guys over at CNBC, they're all working together to hype the stock. But this wasn't 6 stocks. It's like 600 stocks. Everybody was in on the game. Just say my company's .com. And boy, you could bring that thing public. Bring a company public. I brought 2 companies public. You know how long it takes to bring a company public? It takes about 6 years. Because you have to make sure the sales aren't too hot, the sales aren't too slow. You got to have perfect growth. It's really tough getting a company. It takes you years to get it public because all the steps you have to go through. These guys went public overnight. So my point is that there was, and I'm exaggerating, but let's say there's 1,000 companies that were involved in .com. You know how many companies who got involved in .com and the AI I just mentioned? You got the chip providers, the biggest ones, NVIDIA, AMD, and Intel, that's 3. Then you got small, tiny guys, but then you got the cloud, then take the cloud producers. Remember, you got the chip providers who give, to provide the chips for the cloud providers. Then you got Microsoft, Google, and Amazon. So let's take those are the 6 biggest companies involved in this whole AI mess, right? Then you got smaller companies that produce maybe 2-3%. The market share of the business 2 to 4%, we'll say. Okay, so that's your IBM, BABA, and Oracle. They're not big players. When you got over almost 70% of the business going to 3 players, these cloud providers, 3 players. That wasn't the .com. The .com, you had thousands of companies going public. You got just a handful of companies driving this whole crazy thing. So here we are. They're telling us it's not a bubble. And they're telling us how the economy's really doing well. Okay, the economy's doing well. But listen how they cover themselves every day. This was today. And let me first play yesterday. They're saying how, I think it was, yesterday, how great, you see, today's Friday, it was Wednesday. They reported this on Thursday, how things are terrific now with AI.
The S&P 500 gained 0.6% on Wednesday, led higher by the bellwethers of the AI build-out. That would be NVIDIA, Broadcom, and AMD. A near-daily rush of huge new capital commitments and major chip orders have kept this theme in the lead.
Okay, you got that? Today, that's what they're saying.
A mild pullback from record highs on Wall Street as further strength in NVIDIA largely offset continued weakness in some consumer and industrial stocks.
Now, let's go back. There's like 4 different announcements, all right? So I'll play them in succession. So here they're talking about how negative NVIDIA is.
The S&P 500 fell 0.5% on Tuesday, dragged down by 3% or somewhat greater declines in the shares of NVIDIA, Amazon, and Oracle. Scrutiny of NVIDIA's $100 billion deal with OpenAI, investing in the company, which would then recycle some of the money back to buy NVIDIA processors, raised some questions about the underpinnings of demand in the current phase of the aggressive AI build-out.
But the next day, they fix it.
The S&P 500 gained 0.4% on Monday with a huge boost from the 4% jump in NVIDIA after the chip company announced a $100 billion investment over time into OpenAI to develop data centers for AI training together.
Now, next time, bad news again.
The S&P 500 index fell 0.4% on Tuesday. Shares of Oracle shed more than 2% on a report by trade publication The Information that its AI data center hosting business has so far shown thin profit margins.
Well, they got to fix that, right? So the next day,
the S&P 500 gained 0.6% on Wednesday, led higher by the bellwethers of the AI build-out. That would be NVIDIA, Broadcom, and AMD. A near-daily rush of huge new capital commitments and major chip orders have kept this theme in the lead.
Yeah, but then, the next day,
a mild pullback from record highs on Wall Street as further strength in NVIDIA.
Who would make this stuff up? This didn't happen during the dot-com. So all they got to do, and then look, they're telling us how great the economy is. But look at this. Here's the manufacturing report, recent manufacturing report. Look at this chart. This is the manufacturing report right here. And look, every time that manufacturing tanked, that's what started the 2008 crash. 2020, right before COVID, manufacturing tanked. We had the crash, 2020 crash. Here we are now again, manufacturing's tanking. Now remember, Powell turns around and says, I'm going to cut rates for these guys. And boy, they're going to start hiring all these people. It's going to be fantastic. Don't worry about inflation. And guess what? It didn't work. It didn't work. So now you look and say, okay, well, let's check if they're telling the truth about manufacturing. Let's go check and see how much freight they're shipping. Let's go look at the shipping industry. Okay, and here you are. You go, and here it is right here. Look. In 2010, right before that crash, okay, 2008, 2010, that whole deal, freight collapsed. Then we had our crash, right, 2008. 2020, freight collapsed. Then we had our 2020 crash. Today, freight is collapsing. It's collapsing, right? Just like what started the other crashes. Then you take, so you got freight collapsing, manufacturing collapsing. Then they say, there's no bubble. Really? Here, let me give you a bubble chart. Here's a bubble chart right here. AI is the only thing keeping our economy together. Wait a minute, we're not talking 1,000 companies, right? We're talking about 10 companies, that's it. And look at this, the dark blue line here, if you can see this, okay, that's 2023, right? And again, look at the light blue, okay? That was the bubble. That was the 1998-2001 bubble. We're catching up to that peak of that bubble. So when we had that NASDAQ collapse, went down 80%, the NASDAQ, okay? We're close to that peak now. That's the problem. We're peaking. And the problem is, you also have all these people who don't know what they're doing, and they're buying these stocks like crazy, and because they're afraid they're missing out, because they're getting scammed. They don't understand the stock buybacks is moving your price from $200 to $800. Not to innovation. I mean, this is just getting nuts. So what do? You stay with the money. Always follow the money. Stay with it. This thing could go for another 2-3 years because this one's the easy one. They couldn't do that with .com. I mean, you could do 300. Let's say you did, realistically, you did 10 companies a day. You brought them public during the .com. They had no address. They had no phones. They had nothing, right? Just as long as they had, JoeSuckface.com, right? Boom. So their stock went from $5 at 9:30. By 1 o'clock in the afternoon, it's $85. I mean, it was a big con, but it was one after the other, after the other, after the other. Everybody was getting rich. That's not this deal. This is just a very small group. So when this thing explodes, it's going to really hurt people, really hurt people. So again, and gold is screaming. Gold is telling you, go look it up. Don't listen to me. Go look up gold itself. See if it's a red flag. It's one of our biggest red flags. Why do you think Wall Street always makes sure that they get gold to go down? Wall Street and the Federal Reserve work together to depress gold prices. Because they know that when gold goes up, they know our lenders get upset, and our lenders want big interest rates. So, but that's why it's beautiful being in the stock market. So all you got to do is follow the money. And when the money goes in, we buy. When the money comes out, you got to short. But Wall Street convinced everybody not to short. Don't short, it's dangerous. You're going to learn, you're going to lose your firstborn. No, it's dangerous if you don't know how to short. So, learn how to sell short. You'll make more money shorting than going long, I'll tell you, when the day comes. All right, have a great weekend. We'll see you on Monday, and this whole thing will blow over. You wait and see.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
What it was. I think it was 1,000 points.